about 90% of valuation S&P I was reading is caught up in intangibles or goodwill. So a lot of digital assets are intangible, right? So you have to think about where the value is coming from on that. But there's no doubt that there's a great movement towards digital assets. And again, I'm not going to exaggerate blockchain as a venture capital investment. I think that's a place where people have made mistakes in the past. Although I think David's probably had success in that. But I think the whole digital asset thing is symbolic of things are going to be occurring in the near future. I'm a big proponent of DeFi, and I also am strongly supportive of what's going on in that crypto space. I think that crypto and SPACs are both emblematic of a how do I put it, asymmetry in the marketplace has been created from regulatory oversight for 20 years. So in particular SPACs, right? Because we have like 400 unicorns that haven't gone public, and SPACs are taking out companies that aren't unicorns. So, all right. Well, thanks so much, David. Are you there? David Drake. I hope that I have you.
Yes, I am. Can you see
me?
Oh,
fantastic. All right. So I've known David Drake for many years, and I have to say that he's a very hospitable host. He used to host fantastic parties in Manhattan back in the early 2000s. And David is like one of the most energetic entrepreneurs I know, and because he's been in real estate, he's been in crowdfunding, and in crypto, where he's had a pretty big leg up this year. So David, why don't you give some background? Tell us where you come from, your background, where you're coming from. I think we're polling the audience right now about you as well, and questions to ask you, but just give some perspective.
Yes, can we get my camera working? It says that I am blocked.
Yeah, we don't see you, yeah.
It says start video, and it says you cannot start video because the host has stopped it. So meanwhile, I can just introduce myself. Everybody can hear me while they're trying to troubleshoot that. Here we go, start my video. So hi, my name is David Drake, born and raised in Stockholm, Sweden, office in New York, but also office in Dallas. You're finding me in Dallas today. And this cute little picture behind me, that's a picture of the Swedish archipelago that my sister took. So I figured I'd put it back there. I came over here about 30 years ago and made my fortune in real estate and in technology. Own towers in Manhattan, and we're still investing in real estate, but also been in crypto for the last 10 years, as well as venture capital and institutional business. We also do, I also do private equity with institutions co-investing with me in the US. So a lot of work has been done the last year with institutions looking at opportunities in the US. And just like Marty said, I had the fortune of being involved with quite a different asset classes, from liquid and illiquid, from real estate to venture capital to energy, which we see being very positive this year. And I'm wondering if I can share my screen to show you something and double check so we can actually see something. Maybe I can't. Can I do that? No, probably not. As we got into crypto, we made investments for the last 10 years in the space, and now we're seeing the US still a little further ahead when it comes to family offices and institutions. They're investing here, and we have more options in North America than most other places. I've had conversation with family offices and institutions in Asia, but they're very hesitant to get into the space. And it feels like with the 3 ETFs and Bitcoin that launched in Canada just the last 3 weeks, and the BGDC in New York, which has raised over $34 billion just for the Bitcoin. Institutions, and more so maybe insurance companies, since they have a little more flexibility, have been putting money in. Mass Mutual put in $100 million just in December as a test. And their investments obviously are long-term. And that's why you've seen the crazy rise of Bitcoin. It's institutional demand pushing it up. And let me give you a little framework. Bitcoin was the first one in 2009. And Bitcoin also has a limit of 21 million Bitcoin possible. Now keep in mind, about 4.5 million of those Bitcoin are locked. People lost their passwords. They threw away the laptop when it wasn't worth much. So you're left with 15.5 million Bitcoin on the market. Out of that, only 4.2 are still available on the trading market. And the rest are being held by us hodlers, so to say. That's the nickname for holding. And institutions. Consequently, as the institutions coming in buying more and more with these 3 new ETFs launching in Canada just last month, the price keeps going up because the demand is increasing and the supply is decreasing. So yes, the number seems crazy. It keeps going up, but keep in mind, it's a very volatile market and it will continue being volatile the whole year out. We've seen Bitcoin go from 30,000 at New Year up to 42,000 and then crash down to 29,000 in less than a week. Then it happened again at 43,000, going up to 58,000. Now it's 60,000 and then came down again. So we're used to it. This was normal every 2-3 days 4 years ago. But for people looking at it, it's extremely volatile. On the flip side, what's happening with crypto is another phenomenon, which I think we should be talking about. It's called non-fungible tokens, NFTs. And these are just like limited edition lithographs of a painting, but the digital version. So you can actually have 300 or 5 if you want to images of digital art that can be sold and identified and be unique because they're attached to blockchain. And that has really taken off. For instance, the NBA sold $100 million of short videos of shots and dunks just in the month of January. Amazing numbers. And it really took off and it started exploding now. Well, then that's been around for 4 years, but it really took off recently. And interestingly enough,
hey David, your volume is low.
Okay.
You got to turn up the volume somehow.
It's low. Yeah, I heard some background noise here. Let me see.
Or just get closer to the microphone.
Yeah, let me do that. The NFTs are being sold uniquely, like a lithograph of paintings. That's the uniqueness here with this opportunity. And a lot of the crypto people are buying them because it's a hedge against the industry, maybe having a downfall. But how is this working? In layman terms, Bitcoin is technically ledgers of accounting, in and output. And 10,000 ledgers on 10,000 computers agree that this is the next transaction, and they add that input or output. Consequently, if you add a picture or video to that input output on the ledger of 10,000 computers, it's immutable, cannot be changed, because the next transaction is on top of it. You can't go back and change it. And that's really what this industry is. Accounting software allowing you to have a unique identifiable token or video game, a clip, image, or art piece. So right now, the NFT, the digital assets, have gone crazy. Well, maybe not, but it seems to be pretty active. It hit mainstream media. Elon Musk's girlfriend sold a video clip over the last weekend, for $6 million. NBA dunks by LeBron James sold for $30,000. Jack Dorsey's from Twitter. He said, I'm going to sell an NFT of my first tweet. And last I saw, it was a $2.5 million bid for it. And a lot of these investors are crypto investors because we've seen our capital go up 6-10x in 6 months. So to diversify, sitting on a lot of Bitcoin or Ether, it makes sense for me to buy a collectible because should there be more volatility in the market, I still have LeBron James dunking or Jack Dorsey's first tweet, or Bebo, who just sold a digital painting for 69 million, which is most people nuts and crazy, but it's happening, and there's an explosion in this marketplace. What's going to happen is that all the exchanges, let's say about 20 crypto exchanges around the world, are making a lot of money. The rest 1,000 are hurting and dwindling in revenue, and they're going to be jumping into creating marketplaces for these digital assets to be traded. So over the next 12 months, we're going to see hundreds of these platforms popping up. And obviously, like, organic natural progression, we're going to see these focuses on each platform become more and more narrow. For instance, I'm using that to make images of sheet music, classical sheet music. They're sitting on collections. People want to have a copy of it. They want to have a unique copy. Does it sound still bad, Marty? No, I guess not.
Your sound is fine.
Okay, good.
Your sound is fine. Yeah.
Okay. That's a very specific one. Images of a friend who collects Stradivarius. We have 5 of them. They play around the world. Oh, they also live in the Plaza Hotel. But, we're going to want to have a collection of it. I'm working with a ruler of a country in Asia, and they want to talk to one of my media companies in New York. We have shows on Fox and Bloomberg, that assets that I own. They have a car collection of 700 cars. And one of my CEOs said, well, why don't we do digital collections of your cars? Because they're collector cars. So you're going to see popular assets and less popular assets, but also videos and digital art of other forms being sold. And some of the sites are called like Rarible.com, NBA Top, I forget what it was, Top something. You got also superrare.com, and you got OpenSea.io. These are places you can go and look at what these art pieces look like. OpenSea is more general. SuperRare is obviously focused on more exclusive collectibles. And, you're just going to start seeing mass market products like DC Comics and Batman being sold currently. Marvel has closed a deal with somebody. In a couple of months, you'll see Marvel over the whole globe coming out. That's going to be interesting. Even Samsung called that entrepreneur and decided, hey, we want your app on all our phones so people can buy Marvel and DC Comic, digital art. It's like the collector cards. So it's quite exciting. It is hyped up, but hitting mass media, which is interesting. And how hyped up it is, we're just going to have to wait and see. And obviously, there's going to be a lot of noise and nonsense coming in on these platforms, and you're going to have to start tilting towards reputable artists who want to do art and put it up there, or digital artists, or limited edition collections, coins, stamps. So I'm certainly, being aware of this industry, but it didn't dawn on me until a couple months ago that this industry really took off, and it's been tremendously hyped up. But it has value. It is a new asset class. With a new asset class, we can sell digital assets of any product, idea, brand, item, picture, video in my home. And most of the libraries out there are realizing they can create new revenue. One of my media holdings is making movies, which is what I did over COVID. I took my time to make movies because I had time, and my father became
David, you got to move closer to the microphone again.
Yeah, my father became the oldest world champion in Counter-Strike, which is an esport competition. At age 78, he became the champion and started getting interviewed left and right. So I decided to help him out and manage him. And we're now making 5 different movies with 5 different producers who just love the idea of a 78-year-old gentleman being a world champion in what most people would dismiss as a kid's computer game. And consequently, we're planning to do NFTs with him because it's quite unique and quite inspirational to people seeing him. His nickname is Die Hard Birdie, and when you have a chance, check out Die Hard Birdie. It's easy to find him. We just had a Amazon documentary come out for 22 minutes about that on Game Breakers. If you want to check that out over the weekend, it's short and very inspirational. But here we are, where we're creating 3D NFTs of him to inspire both old and young, and build, kind of bridge generations. And we see an opportunity to allow people to own a piece of the digital assets that can be created around him. So this aspect of it is quite interesting. And this explosion in crypto is probably going to continue, not only for NFTs, but on the crypto side as well for the next 6 months, as we're seeing more and more institutions and public companies putting money into crypto. MicroStrategies hit the news in September because I think they put in $400 million buying Bitcoin around 10,000. Last Friday, they sent a tweet that they bought another $15 million at $57,000 for crypto, and they're publicly listed. You're having more and more publicly listed companies using this for their treasury.
Hey, David, David, we got the results of the poll back. And so some of the questions are like, how do you find early opportunities? And I think what's interesting about that is, does success breed success? I mean, given that you've been in this space for so long, do more people come to you earlier? I mean, and I'll give you an example. Dan Moorhead, you know, he from Pantera, he was obviously one of the first Bitcoin investors, but he told me that, you know, whenever a new coin is printed, you know, like Ethereum, for example, he's first in, right? Does that happen to you as well? Are you getting, you know, do you get deals way before everybody else? I mean, so has it become easier for you to find deals? That's number one. Second question is, what role does real estate play in your strategy? And also number three is, how do you hedge your crypto? So.
Well, I'm going to go backwards. Number three, how you hedge crypto is by getting the collectibles or investing in a company who do
9, 10.
Because that is offsetting your holdings. Secondly, on real estate, we've been looking at real estate since crowdfunding days. I worked with SEC and FINRA in 2011 to create the Jobs Act crowdfunding exemptions that we had out of the 7 laws that were added. And real estate was one of the few things on equity crowdfunding that took off as we worked with SEC and FINRA to create that law. It would take us 4 years to 2016 until it turned into law. But on the crypto side, which is similar because you're now allowed to advertise in the US, it has not been solved. Many have failed. Actually, most of them have failed, and many have tried. It's just that real estate deals that we own, they have restrictions on the debt, on the LP capital, and most entrepreneurs who's getting into the real estate crypto space are not familiar with those challenges. And we have not seen any real estate successfully scale. You've had some announcement, but most of them are just hype. And we're still looking, and I've been looking at least 50 different solutions around the world in crypto. And unfortunately, they are not solving the issues. And we have some interesting solution ourselves that we're thinking about, such as non-tradable REITs, private REITs. Well, that makes sense. They're built to be public, but they're not because the CCC is charging too much money, it's too expensive. So with blockchain, you could solve that. That's interesting, but nobody's really solved it, nor other areas of raising capital with crypto. And I don't think it will be solved easily. And it might be.
David, what about deal flow, David? Deal flow. Are you getting, you know,
yeah,
you're a pretty connected guy.
Yes.
I think you've got a great, you know, family office network in Europe, et cetera, et cetera.
Well, you know,
in Asia.
I have a presence in Seoul and Dubai, and my office is in New York and Dallas. So yes, we've been investing in startups for the last 20 years. So as well as in crypto, the deals are coming to us because we were so early on and built the reputation of brand. So we get offered investment opportunities before others, just like Pantera is. And that gives us an edge. It's by having a presence and building a network globally. They know how to get to you and you respond to them and you actually get back to them. So yes, we get to see opportunities faster than other places. And I think that's in any industry. We build relationships. We built relationships early on the last 20 years, and that translates into crypto. So the funds have access to it, and some of them have done really well. I would say we don't have a fund, but you know, as you look at funds, you know, find out if they did well during crypto winter, which was 2018 and 2019. Most of them didn't, and many of new after that. So you know, how are they going to deal with the risk mitigation in that situation? And we saw most of them fail in 2008 when crypto winter came. So today, I'm more interested in non-correlated investments, and arbitrage is interesting. Crypto arbitrage, absolutely. You know, we like that space. But keep in mind, the US, or however, the US is further along than I would say Europe and Asia when it comes to institutions and families investing in this space. And there's some big difference from the hype 2017 into January 2018 as opposed to now. The entrepreneurs are more sophisticated. The solutions are far more sophisticated, such as DeFi. And DeFi, if I want to break it down, it's really a savings account. You're putting money into a savings account and you're getting higher interest because you did so, taking the money out of circulation. DeFi have a lot to do that. you will have sometimes 4 to 15% interest by staking or allocating your holdings in crypto by not trading them. And consequently, DeFi has many derivatives and it's gotten very interesting, and they're being new ones created almost every week, not every day. And that space has a lot of innovation. Unfortunately enough, the SEC in the US is supervising because we saw a lot of fraudulent companies like this, well, not in DeFi, but in crypto in 2017. Many of them, the few that survived, are doing really well, and new ones coming up are very interesting in how they're structuring financial terms and contracts with no middlemen. There's trustless contracts that makes it really interesting what they're creating. And it takes a little time to dig into it. I would just suggest you go to YouTube and ask for DeFi examples, as well as liquidity pools and staking examples that could help other people.
That's really good. You have a couple of questions, from the Q&A and from the chat, and we've got about 5 minutes. We've got to move on to the next speaker. So maybe you can address that and, talk about, how does a crypto whale monetize the cryptocurrency to buy real estate without creating a taxable event? That's one of them. And then the other one is, are you using digital custodians for your crypto investing or to partner on products, creation, intermediation projects, et cetera? Those are the two questions.
Yes, I personally use digital custodians for my assets. And as far as buying real estate without a taxable event, there are solutions out there, and we're going to have to take that offline. It's rather proprietary and as well as complicated. But it is similar to what the family office can do with offshore insurance wraps, which we've been helping other families to do like we have. Let me see what other questions we have here. When we look at non-US deals, what's the most important aspect you look at? It's always been the team and the progression they're making in the business. There is an NFT platform company who is making over $1 million a day already. And they're selling at million and growing on a daily basis. Some of these platforms are exploding. When you see real business implementation and real revenue from consumers and retailers, that's when I get excited, because that starts bridging into the real world and people can start relate to it. Theta TV was another one I really liked. They actually created a decentralized streaming service, and they already had 1,000 streamers on their platform, meaning that if you log in and look at a video, you earn tokens just by watching, which I thought was brilliant. Compensate people, profit share with people in tokens for them just watching a stream. And they've grown really well. I think they've been at 10x in the last 2-3 months. And because you have a real implementation and use case of it. The last few years, the majority, almost 95% of all the deals have been B2B, infrastructure, protocols, support, DeFi, etc. And because these changes, we're going to start seeing more and more this year, it's going to be easier for people to relate what's happening in the industry.
David, I just want to make some comments on DeFi because, we were in there early with Steve Waterhouse at Oak Ridge Labs when he was looking at stuff. And, obviously, when it comes to DeFi, a lot of people today are saying that it's really ready for prime time. You're seeing a lot of different applications. Any thoughts on DeFi? Is it ready for prime time? Is it just a matter of turning a switch? Is it formidable?
In the crypto industry, it is formidable. A tremendous amount of money is being put into staking, meaning it's a savings account. You say, here's my tokens in my wallet. You can't touch it, but I'm committing it to your program. Pay me a savings account. That could be a locked up period or it could be no lockup. It's the savings account. And people are jumping on it because it's little risk and you're getting a return. And if you take some money out, it's perfectly fine for some of these DeFis. That part is easy. For mainstream, well, PayPal is launching crypto for their members. They launched a little bit of it. They're going to roll it out to all members, and they have 350 million members. They bought Curve. When they roll out over the next couple of months, you're going to see a big pump on Bitcoin because now you get 350 million people who can buy it. I do not know what they're going to do in DeFi, but they bought Curve, one of the leading decentralized exchange protocols for DeFi. And we'll have to see how they're going to roll that out. But I think that will be first mainstream rollout where mass market of 350 million users of PayPal will get exposed to it. So I'm
fantastic. David, we're out of time, but this is really fantastic. And you've got a lot of questions from the audience. I'm hoping that you can stay online for a bit and answer their questions, and also that you can share your contact information. And I mean, if you're in Texas right now, you really want to meet David, so try reaching out to him, especially if you're in the crypto space, et cetera. Get his contact information. If you're in Dallas, I recommend you try to have a cup of coffee with him. If you're in Austin, drive up. So again, David, thanks so much. Appreciate it.
Thank you. My email is david@LDJ Capital. Feel free to reach out. Thank you, Marty.
Fantastic. And I'll circulate that